I think we're going to see a rebound over 2021, as you were mentioning, probably particularly in the second quarter. I mean, clearly we got the lockdown and the danger of activists striking at this type of stage is, it appears, a bit tone deaf when companies are going through difficult times. But we see a lot of activity, it rebounding, and the reason for that is the disruption caused by COVID and the various other aspects creates opportunities for activists.
Early on, I was somewhat critical of some of the CEOs, their ability to weigh up the demand side. It felt as though they're very aggressively moving around supply chains to make sure they had the right amount of input coming through from various parts of the world, given how supply chains have been configured internationally in recent years. But the crisis has morphed for some around debt and how they sustain that side of the balance sheet. Others have been very aggressive on the M&A side. Where do you think investors will hone focus when it comes to some of these European companies in terms of strategy?
Well, I think there'll be two things. One, they will be looking at have those businesses resize themselves appropriately for the changed levels of demand. And you look in areas like airlines or some of them, going down, or health care sort of going up potentially. Have the companies change their operating model sufficiently and flex their operating model, be able to respond to the very different types of demands which are out there. So that's the one area. And then the other thing which comes out strongly in the report is activists are focusing on various sectors, on selected sectors. So industrials is very much in their sights. But also some other sectors like tech and healthcare, slightly surprisingly, are also going to be in their sights as they look at, are they getting the returns from those sectors that they should be? Not just revenue returns, but is the cash actually flowing through to the investors?